What's up, everybody? It's Omar. It is March 23rd, 9:16 p.m. and I'm making my video building up for my watch list for Monday. Today the markets were bleeding blood red. A lot of this is due to these tariffs, and just Trump is just causing all kinds of chaos. I don't know if they'll stabilize. I'm assuming they will stabilize at some point, but I don't see it happening anytime soon. I had posted my watch list Thursday night for today. I just didn't make a video. I thought Guess was gonna pull back, and it did pull back eventually, but it didn't happen at the open. It kind of ripped, and I saw it rip, and I tried to take a trade on it. I tried to take it through my phone, so I didn't have a chance to trade. I'm not home. I wasn't home or anything like that, so I missed my entry. It's just too hard to place the trade on E-Trade. It's just like it's too many steps. They got to make it faster, so I missed my entry, and I was hoping to short it at some point, and I posted on Twitter, see how it would react to 21. And if you notice, when it formed a head and shoulders pattern here, so shoulder, head, shoulder, and then it just sort of like collapsed. And I've been waiting for that collapse, because I thought it was gonna go back. Let me see. I posted it on Twitter actually. Let's see. Yeah, so here it is. Guess ripped yesterday, squeezing shorts all day. Got to expect people to take profit at the open. Looking to short off a key resistance level. If price action presents an opportunity, otherwise I'll wait to strike. So you only do it if you wait to strike. It actually gapped up instead of pulling back. Which I was shocked. And you can see, gapped up, broke. Let me actually pull up the big chart. And all the indicators is bullish. It's above the 50 simple moving average, above the 200 and 300. But once it broke that 2021 here, let me put the 5-day 1-minute chart so you can see it a little better. Yeah, these are the indicators. When it's above the 300 simple moving average, that yellow line, yeah, it's usually a very bullish sign. And look, it broke 2021, and look, this is another fantastic example of why you don't buy the breakout. Look what happens. You wait. Stock breaks, pulls back. Guess what it tests? 2020. Gaps up, pulls back. Guess what it tests? 2020, and then takes off. That's why you want to wait to see. I mean, in theory, you want to wait to see these candles. You're not sure what direction the stock wants to go in. But once it double bottomed that 2021, 2020 area, it took off. And it was based off, let me zoom out a little bit so you can see. It was based off the high, all right? The high, yesterday's high, which was 2021, 2020. And that is the clear breakout sign. You could have took this long. I tried to get in, and it just took too long. By the time I got everything done, it was already at like 2057. And I could have, but I was distracted doing too much. It was like too stressful. So I just left it alone. But what I did post was Guess keeps running. Was just gonna pull back, miss my entry. We'll look to see how it reacts to 21. If holds, I'll go long. If it doesn't, I'll go short. Unfortunately, by the time this all happened, I was just busy working, so I couldn't keep my eye on it. But you can see that once it gapped up and hit that 2013, it pulled back, and that pop, this is showing weakness. And right in this candle, you could have took it short, risking the 2113. And you got to think, damn, the stock is so high. It's so overextended, and the Dow is down. Everything's down. People are going to have to take some profit. And sure enough, it tanked. This was what I was waiting for, that big wash, and it did come, And if you'd have shorted here, you could have risked off the high and just watched this tank all the way down. And guess where it bounced off? Yesterday's high, that 2021 level. Look, it touched literally touched 2023, and then shorts covered, and then it got that artificial gap, but it found some overhead resistance here, and it just kind of washed. And it didn't have a lot of volume, but I'm just trying to get you guys to understand the patterns, how to play off those key levels, and I also talked about Twitter as well, and Nike was a dud, but Twitter was good. I said All tech social media dropped hard, but Twitter's at a key level of support, 3061. If it holds, can be a great dip buy today. Markets may recover. See, maybe I could be wrong. Seems to be at bottom. If I'm wrong, it can low. It can you can lower. You know, it can drop lower and look for a dip by 29.50. You know, and on pre-market, I was really tempted to take a small position on Twitter. And I was really tempted to do it, but I'm not that comfortable trading pre-market. You know, because when I posted this, yeah, let me pull up that like 10-day, 30 minutes so you can see what I'm talking about. This is what I'm talking about, right? So it gapped down and it started, you know, gapping up pre-market. So if I pull up, let me pull up the 5-day, 1-minute chart. You see, like it literally like touched it pre-market, and this was like at 6:40 a.m. and it started gapping up, but you know it had no volume, and that's why, you know, I didn't want, you know, it would have been hard to get in anyway. And with E-Trade, you can't even you can't buy before 7 a.m. So you know, so you know, I by 7 a.m. you know it was already up up around right around here. You know, which still would have been not been bad, but there was no volume. So, but I would have loved to have, if they had the volume, to take a trade pre-market risking 3061, but I didn't do it. And sure enough, the market opened, and you know, look what happens. This is why you map your key support and resistance levels. Look, it tapped this. This was the pre-market high, couldn't break it, and right in here, you could have took a short, especially once you got this pop right here. Right in here, you could have took the short, risking 3061, and took this for a nice wash at the open. And you know, it found its support 3078, and it starts, you know, gapping up. You can start getting the volume, and you know, it took off, it went off and running. And then, you know, once it held that 3161 level, like you see the consolidation, and you see that candle gapping up, that's where you could have went long, risking 3061. You know, and that's how I kind of make these trades. You know, or no, let me not do that. I just want to clear this. Remove drawing. But you know, the trade that I did take was Facebook, and I'll talk about Facebook when I go through my list. So this is what I got on watch on Monday for Monday. And basically, again, guys, for those of you that are asking, I use the biggest percentage gainers. I look at the biggest percentage gainers, and I also look at volume. I look at stocks that are like holding their highs, or like if you know, haven't given up all their gains on the day, because I expect them to be volatile. And then you can also use FinViz. Again, I showed this several times in a video. Depends on the criteria, but I look for stocks under 50 bucks, up 3% with over 1 million shares traded. And I look at the candles. If I see a big green candle, I'll look at the chart, and then I get a sense of, you know, if I want to trade it or not. That's sort of how I do it when I use this. Or on my Thinkorswim scanners, I literally just filter by volume or by percentage gains, whatever I want to do it by, and then I just go through the charts and then look for stocks. Like, look, CDNA was a stock that's on the watch list. It went from 5 to 8, 300% move. You know, and it didn't give up all its gains, right? So it opened what at 5. Let's do this. It opened up. The market opened. It opened at 645. It had a high of 835. Retraced back to 695, and now it's starting to gap up. So, you know, you got to think that it's probably going to be volatile Monday. That's why it's on my watch list, and I map out my key support and resistance levels to potentially make a trade off it. What I like to do with these kind of stocks that gap up is look to see if it's going to run, and then if it, you know, hopefully gets near its resistance point, and then short into resistance. That's how a lot of guys make a lot of money, like Stephen Dux and Tim Grittani. They, you know, it's just simple support and resistance you make trades off of. Yeah, so anyway, let me go through the watch list. So FUSZ. Now, I've been wanting to put this on my watch list since the 80-cent mark, and I should have. I didn't, because, you know, it's choppy, but this thing keeps moving, and it's a clear pump. I mean, the stock is dog shit, and eventually it's going to tank. Now, I don't know if Monday's going to be that day. You know, what happens is, you know, they pump it, the pumpers pump it, and, you know, they keep advertising the stock, and they wait for huge volume to come in, and then they, you know, then they get all the suckers to buy, and then they sell their shares into the spike, because it's got a lot of volume now. Monday may be the day. Now, what you want to look to see is let's say it does, if Monday's the day it collapses, when a stock goes red and it just completely tanks, you're going to get a nice bounce usually. So you can look for a dip buy opportunity on the bounce. this stock may be hard to it may be hard to short. Nothing to borrow on Thinkorswim, but maybe E-Trade will have shares. I'm not sure. Interactive Brokers probably will, and Centerpoint definitely should have shares. You know, but it's been on this tear ever since, you know, 9 cents, which is amazing. What a run, man. Too bad I missed it. But let me pull up the big chart. So what I'm looking to do is if it breaks 165 and holds, you can buy the breakout, but be very, very careful because at some point this thing is going to tank. All right, it is going to get in. Maybe it's $2. I don't know, you know. But be very, very careful if you take this, you know, long, because this thing is eventually going to tank. You know, but I would buy the breakout if it held. You know, I probably wouldn't take a lot of size here because you know, I'd be scared. I'd be much more comfortable shorting this than going long or buying a dip, okay, off a clear support level. So if it pulls back, these are the potential levels that I would buy dips: 140, 116, and 95 cents. All right. So all I do is, you know, I pull up. Sometimes I'll put up a bigger time frame if it's too choppy like that, and then I just look for those key support and resistance levels to, you know, where I think, you know, they're key to potentially buy dips. All right. Most of you guys are not going to be able to short this stock, so you know you may be able to buy a dip. All right. So that's what we're looking for Monday. Now it's still bullish. I mean, all the signs here are bullish. It's riding that simple 200, 350-day moving average. It's just, but look at this. It's so overextended. It's so far away from the 50-day moving average. 50-day moving is at 87 cents. It's at $1.65. So, you know, it's like a magnet. Eventually it has to retrace back down. So it's going to be a big fucking crash. You know, just be careful. All right, next up is NWY. Now, this is dog shit. The only reason why this is on my watch list, look, like this barely ever trades any volume, but it's up 1.3 million. It has 1.3 million shares traded today because it had some good earnings. So even though this is crap, look at this. The last time it had like a break like this, it retraced and then it just slowly gapped up. So if it breaks 364 and holds, take it long for a swing trade and use 364 as a stop. You know, but if Monday, and you see, because it has a gap to fill below, and it's so far above the 50 simple moving average that, you know, at some point it's going to retrace back to it. But what I like about it is that if it can't hold 330, you could take this short because there's no support up to like 280. So, you know, I'm eventually going to look to short this stock, you know, but, you know, it doesn't have a lot of volume. But if I can even get, you know, 1,000 shares, if I could get that, that'd be fantastic. So I would love for this to break below and so I can short it. But, you know, I'll be looking to see. So these are the two key areas I'm looking at, 364 and 330. It's probably not going to have no volume one day, but we'll see. But if it breaks 364 and holds, take it for a swing trade. See how high it goes. All right. Next up is Cali. Cali, you know, this thing ripped on Thursday. And then it ripped again today. So, you know, it had you know, it had a big day. Actually, this was on the 21st. So what's that? Today's Friday. So Wednesday. Then it had the red day yesterday. And then, so this artificial spike was probably shorts. Like they were holding and it found support here. You see how this is where the move started, right around here. So they're like, shit, it's not breaking below it. So they covered. That's what happened, and it causes the artificial spike, and now it's kind of tanking again. But you know, you see that if it's bouncing off this clear support level of 469 and moving. Doesn't mean that, you know, it can't run again. All right, so we'll watch it. There's nothing wrong with putting a stock on a watch list and seeing what it's gonna do. So if it breaks above the key resistance level of 524, which was a support level, you know, you can take it long, risking off 524. All right, and you know, the next key resistance level is 584. If it gets above that, you can keep long. But if, you know, if it gets rejected, you can short, risking off that level. And these are your price targets. So like if you buy above 524, look for 584, and then 560, 635 to hold. And then if it breaks above 635, this thing could potentially run. You know, I don't think it will, but you never know. You know, and then, you know, you got some overhead resistance here at a 765 and 877. I didn't even map up that high because I don't think it's gonna get up that high. You know, if we look at the volume, It had 6 million shares traded 2 days ago. Then 476,000 shares traded yesterday, and then today it had 2.7 million shares traded. So it's up again, the volume. I don't know, but sometimes you do get like a secondary run. It's possible. The float is really low. It's a low float stock, so I mean the potential is there. So we'll see. I mean, I doubt it, but we'll see. Next up, IAG. The only reason why this is on my watch list is because the Dow is down. So when the Dow is down, SP is down, people get freaked out and they buy gold. So I'm only looking at one level. Now this is slow, but if gold starts running, this can move with gold. So if it breaks above 535 and holds, take it long. It's a slow moving stock. It's not fast and volatile, but you could take this for a nice swing trade. Last time this ran was last August when the Dow was down and gold was running, and this thing ran from 530 all the way to 725. So there's no reason why it can't happen again. And then it had another run here back in October. It went from 5 all the way up to 635, and then it had another run in December from 4 all the way up to 6. So it looks like it's poised to move again. So you know what? I mean, just be careful. This 200 simple moving average is 566, so that could be an area of resistance. But it's possible. It's holding, above the 300 moving average, which is 519. So if it breaks above 535 and holds, take it long. Next up, GERN. This thing does not want to die, and it has a lot of support and resistance, a lot of overhead resistance. This thing spiked again today, bounced off 530, got to a high of 610, and got back down, held support at this 530 level, and is up. So it's holding 579 right now. So I'm looking to see if it breaks above 588 and holds. You can take it long. But really, I would think the safe play is to see it break above like $6, really $6.10. I mean, I don't probably want to touch this unless it broke $6. All right, but what's cool is that you can watch and see if it gets rejected by one of these levels above. You can take a short, risking off one of these high areas of resistance. And the more volume there is on overhead resistance, if the stock doesn't have volume, it's going to get rejected. All right, so it's something to keep in mind. And this stock has had such a run that you got to think it's gotta wash. So I got a lot of alerts set below because this stock has been running forever. Let me pull up like a bigger time frame, and I just got a lot. I got a lot of alerts here, as you can see. I got a lot of alerts here for potential dip buys at $5, $4.84, $4.70, $4.50, $3.80. Because this stock has been on my watch list running since $3.80. Believe it or not, it just keeps going and going and going. I mean, if you look at this on the 30-minute time frame, it's still bullish. It's still above the 50-day moving average, on a high time frame. So it has the potential to keep going, but we'll see. All right. Next up, let me put like 5-day 1 minute. Next up is CDNA. CDNA, is another thing that spiked today, launched the move from 6 to 835. And then it kind of washed, and it's holding the 695 level. When the stock opened, it opened at 645, and right now it's at it's at 749. So it's holding its gains. So it could potentially move come Monday. So for me personally, let me pull a bigger time frame. See how it's like this? It's too choppy. So usually what I do in this point, I'll put a bigger time frame so I can get a clearer area of support and resistance. So I'm looking at 3 key levels here. If it breaks above 761 and holds, I'm gonna take it long, risking off 761. Just be careful about that $8 area because there is some overhead resistance at 8. But if it pulls back, I'll potentially look for a dip by 695 or 680. Now, if it can't hold 680, you could take it short, and you're gonna get nice little wash back to a 630. All right, so these are the key areas that I'm looking at. I mean, there is some good support here at 715, 716. Yeah, so 715, and let's see how much volume is there. 39,000 shares, 22,000 shares. So it's significant. So I'll fix this. I'll put 715 And let's see, we can say create alert, and we can say potential dip buy at 7:15 or short rejection. You know, and that's what I do, guys. I just map these key support and resistance areas to potentially take trades. That's all the trading is, guys. They make, you know, it's not as complicated as people make it. If you're day trading, at least. The VIX, so TVIX, so you know, this is on the watch list. The way this works is the Dow, it goes down, the TVIX goes up. That's basically how it works. So if the Dow is down Monday, expect this to just continue to rip. This is a very volatile, though. You got to be careful. So be very, very careful. Don't take a lot of size because you can get crushed if this thing just washes. But if you only trade this if you're looking at the Dow and the SPY. So if the SPY and the Dow are going down, then this is going to continue to go up. All right, so I'm looking at one level if it breaks above 1068, but I would only touch this if I clearly see the Dow and the SPY down. Then that's when you trade this. All right, next up, JNUG. This is on my watch list because, you know, I expect as the Dow continues to go down, and you know, and the SPY continues to go down, my expectation is that gold is going to continue to go up. So, you know, the miners and all those things are included. So I'm looking for a breakout of 1492. If it breaks and holds, I'll take it long. And then I'll look for a potential dip by 1443, which you got a lot of clear support here. So if it holds 1443 or it breaks below and then breaks back up above it and holds, take it long. All right, those are the two key levels I'm looking at for me. You know, you can map this however way you want. There's, you know, a lot of, you know, there is some good support here at 1463 too. If you look right here, there's some 14. We zoom in a little bit better. 1463, yeah, like 1462, 1463 seems to be like there's some clear support. So, you know, if it breaks above that, you can also, if it holds, you can take a long risking off that too as well. All right, next up, CRC. CRC is up now. There's a strategy that I like to use sometimes. So this is a 5-day 1-minute chart, and as you see, I have my moving averages here. If you notice, when the stock is above the simple 200, so the purple's the 200, the yellow's the 300, and the 50 is the blue. But when it's above the 200 and 300 like this, you get a pop. And usually what happens is when you have a run and it dips below those, you get like a wash. And then you see how it kind of like consolidates and starts grinding up, and then it pops again. And you see it consolidates here and pops again. Well, if you look at the time frame, the 1-minute time frame, you know, look at here, it crossed below it, and then it had a nice wash, and then, you know, kind of like gapped above it, and you had a long. Well, if we look at the time frame, and I'm not saying that this is gonna happen, as you notice here, it's below it now, and it's consolidating. So based on this, you know, the potential is for a wash come Monday. Now, I don't, you know, it's just something that I notice doesn't happen all the time. But, you know, I'm looking at a few key levels. So if it breaks above 1790 and holds, take it long, risking off 1790. If it breaks below 715, take it short, risking off 1715. But just be careful. You got some good support here at 1687 and 1656 and 1611. So these are areas that I would potentially dip by too, you know, if you know, if it found the bottom and then reversed. All right. So these are the key levels that I'm looking at. All right. Next up, Guess I'm stalking. I don't know why I'm so stuck on this stock, but my expectation is based on that 5-day 1-minute time frame. Let's see. So you see how it dips below it, you got a wash. Then it consolidates here, dips below it, you got another wash. You see it can't even get above the 200 moving average here. But right when it breaks above it here, you see you got a little pop, pulls back. You see right here when it breaks above it, you got another pop here. Pulls back, holds, and then you got another pop. You see, and when it holds above, especially above that 300 moving average, you get that run. And you know, if you notice here, you know, it's kind of above it and holding it, and you see it's holding at 300, you get another pop. You know, every time it holds at 300, you get like another pop, and then boom. You notice here, let me zoom in, it held at 300 again, 200, 300, and you got another crazy pop. All right, and then if you notice, right? It's above both those averages, and now it consolidated here, held, got another pop. Now look what's happening. Okay, today, you know, it broke below it, and you know, you got that wash and it broke below it, found the support, and it's kind of consolidating now. And you know, I think that Monday is the day that it washes. I could be wrong, so I'm only looking at a couple of key levels here. So if it breaks above 21.13, I'll take it long. Otherwise I'll short or risking off that. But if it breaks below 2021, I'm going to take it short. And I think at that point, it'll get back to this 1960 level. So I just, because I've been watching it, I'm just looking. Eventually, it's going to wash. I mean, it's so overextended. It's so above the 50-day moving average on the daily that you got to think at some point it's going to come back down. That's all. And I got these key potential levels to buy dips. But I'm just looking to short it. I may not even buy the dip. It's not that. It doesn't have a tremendous amount of volume. So we'll see. Next up, NUGT. NUGT, and again, this is on my watch list because you know, as long as the Dow goes down, the SPY is down, my expectation is gold to go up. So I'm looking at 25.71 to go long if it holds, and if it pulls back, I'm looking for potential dip buys at 24.82 and 24.64. All right, those are the key levels that I'm looking at to potentially make a trade on the stock. And obviously there's some areas below you can map out your, you know, if you want to put another support line here, another trend line there, I mean, you know, potential dips, it's up to you. Or right here there may be some, you know, may bounce because that was a high and a lot of support there. So, you know, just areas to think about. All right, next up is home. You know, this thing was up a lot today, so if it breaks above 33.25 and holds, I'll take a long, risking off that. You know, potential dip buy at 30.93, 29.87, and 29. These are the key areas of support listed below. And if you know, use my little theory, you know, if you look at the 200 and 300, you know, it broke below it here, you know, and it's just been consolidating, and you see it can't really hold above it, and you know, kind of got down, but once it broke above it, it just ripped. And if you notice, it had this crazy move, and now it's consolidating here, and it's getting below it. So my expectation is Monday that it will pull back. All right, we'll see. LFIN, this thing has been running crazy. I mean, since like $33, this thing has been running. This is that stock that went to $142 and then came back down. Now, it's at, what I'm going to do is, you know, it just continues to run. And, you know, it's not running crazy. It's running slowly, but it is above the 50-day simple moving average, and you think at some point it's got to retrace back and touch it. I don't know if Monday's the day, but if this breaks above 74.50 and holds, I'm going to take it long. I'm just going to take 100 shares because this is very volatile. You know, I wouldn't trade more than 100 shares on this thing because I would be too scared because of the spreads and the volatility. But if it breaks 74.50 and holds, you know, potentially take it long. What I would love to see is a red day, because this thing got so much to pull back that, you know, you think it's going to pull back. But I think they have like a price target of $80 for the stock or something like that. But, you know, potential dip buys at 72.68, 70, 66.17, and 63. And obviously you can short off each one of those key levels. All right, so it's something to think about. It's a higher price stock, but that's all. I just got my key level support and resistance levels mapped. And last but not least, Facebook. Facebook, yes, I'm still in this. I'm holding my short over the weekend, which is the second time I've done this, and it's the second time I've done this with Facebook. I think Facebook is gonna, I said 147, but I think Facebook will collapse to 148, and if it can't hold 148, man, I think it's lights out for Facebook, man. You know, the reason why I say that is because if you notice, it has some clear support here at this 148 level on the yearly. So this is the, zoom in, so this is the yearly right here. It has a lot of support here at this 148 level. So you know, the low here is actually 147.80. So 148, 147.80. If it breaks below that, man, Facebook, oof, man, it's gonna get way ugly. Now what I would be looking to do is Monday is if it breaks below 158.80, you can take it short. But that's probably, honestly, well, I think what will happen is Monday shorts will cover pre-market. It's gonna hit one of these areas above, resistance areas above, and then it's gonna continue to tank. So map your key resistance levels above you know, that's what I did. So right here, 130, 163.78, 160, 235, 160.93. All right, so that you see, that's what I'm doing, mapping based off those key right here, off those key resistance areas above to potentially take a a bigger short, but that's what I'm looking at, guys. So I think Facebook is going to continue to go down. I frankly hate Facebook. I think Facebook is just an echo chamber of negativity. All people do is just complain, and I don't know, there's too much narcissism. People really think that other people spend all their time thinking about other people. It's crazy. I got sick of it, so I just let it go. So hopefully, guys, you found this helpful. Also, guys, thank you so much. I just went over. I didn't even know this. I'm over 1,000 subscribers. That's freaking awesome. So thanks, guys. I really appreciate you following me, and let's see if we can continue to grow, and continue to comment, like, subscribe, and share. All right, folks. So have a great weekend. Maybe I'll do another video. I'll think about it. This weekend, I don't know. I'll think of a topic, and have a great weekend.